Vaishali madam, please begin.
Okay, sir. Hello, good afternoon, everyone, and thank you for joining today's webinar. Today, we have scheduled webinar on financial planning, which has been organized by Applied Sciences and Humanities Department of Parul Polytechnic Institute, Parul University. I, Vaishali Nathwani, would like to introduce today's guest speaker, Eleda Palmieri from Cyprus. She is a certified financial planner, a qualified insurance broker within the Insurance Institute of Cyprus, and she is a fellow of the Life Management Institute of the United States of America. She has worked for 10 years in the insurance sector, holding managerial positions within the operations department, where she has been involved in various challenging projects. In 2004, she had a career change by joining Liking Bank as a senior credit officer in the SME sector. In 2013, she took over the position of assistant manager at the SME Business Center of the Bank of Cyprus until October 2019. She holds a master's in business administration from NET Business School and a bachelor's degree in accounting from the University of NET, UK. Throughout her career, she has discovered one thing that made her differ from her colleagues at the bank, and now in the consulting and insurance industry, she cares about her customers. And by caring, she means get into their shoes, understand their need, their urgency to fulfill that need. And customers realize and acknowledge her being empathic. They appreciate her and they trust her. And by gaining their trust, they want to do business with her and thus grow together. Because every time you interact with someone, you learn something new. And it's a privilege for us today to learn something new from you, ma'am.
Hello, can you hear me?
Yes, ma'am, you are audible.
Thank you very much. Thank you. Good morning, everyone. Thank you for the invitation to speak at Paruli University. My name is Elada Palmiri. Elada in Greek means Greece, the country in which Western civilization was originated, the birthplace of democracy and the Olympic Games. I am a certified financial planner. I am a financial wellness coach. I help people like yourselves meet their current money needs and long-term financial goals. I provide personalized advice on how to maximize your potential for meeting your life goals through a structured process and careful risk assessment. I'm going to share now my screen for the presentation. Okay, let's move on to our presentation. Okay, through this presentation, I will try to explain the process of financial planning and how you can benefit by planning for your financial goals. Let's see what is money. Money is the mean to be used for achieving your goals in life. Making money cannot be a purpose for living. Money should follow our purpose for living. To achieve the above, we need to plan for our finances. We need to consider what we want to achieve short-term, medium-term, and longer-term. As soon as we know what we truly want to do with our lives, we need to carefully structure the way to get us there. Writing down our goals is the only way to start working towards them. What are your goals? If I was asked the same question a few years back when I was younger, I would probably say that I wanted to be a millionaire. Is this something you thought of yourselves? Well, consider yourself having $1 million in cash. How are you going to spend it? If you found yourself in the middle of a desert with the same amount in cash, how does this make you feel? How are you going to use this amount of money in the desert? Any thoughts? Well, as you can see, it is not the money that actually matters, but the things you can do with the money. So money is the way to get and achieve what you want yourself out of life. So let us see some of these goals that most of us have during our lives. We want to be educated, we want to have a university degree or any other certification. We want to get a good and honest job. We want to get married, have children, have a family, buy a house of our own, buy a car, secure an income for the retirement period. Do any of these goals resonate with you? Well, as you can see, all of these goals require money to be achieved. So today, I'm here with you to give you guidance on how you can use your money to achieve your goals. And this guidance is coming through careful financial planning and years of experience in the corporate sector. What is financial planning? Well, consider the map of India. As you know now, it's everything on Google. If you want to go from your house or town to Barul University, you probably Google it or search it on your map. Likewise, financial planning is the way to find your path towards your goals. Why is financial planning necessary? Through financial planning, we are able to address questions such as, how much should I save for retirement? What is the amount of life insurance that I need? What type of investment should I own? Can I afford to buy a new house? Is there a way I can save on my taxes? Failing to plan is preparing to fail. Which one are you choosing? Are you choosing to plan or are you choosing to fail? Being young and enthusiastic, I'm sure that you have a vision of life. You have goals as to what you want to achieve. This is why you are here at the university studying, correct? Goals that have been mentioned above, such as having a good job, which will offer you enough income to do the things you're dreaming of, like getting married, having a house and a family. It is proven that people who plan ahead have increased chances to succeed and achieve their goals. Financial planning forces us to set our goals and prioritize. It forces us to take both quantitative and qualitative decisions about life. For example, when I first started working in the corporate sector, my starting salary was about $900, which was considered very good at that time. It was back in the 90s. I was 24 years old. And with that salary, I was able to move out of my parents' house and live in a rented apartment. I promised myself that by the time I reached 30, I would earn at least $2,000 US. per month. I created a picture of me having a family, having a house. And so I worked hard enough, and long hours, which I got through that 2 promotions. My income increased to more than $2,000 per month, which was more than enough for a young woman in Cyprus, where I live, to be able to live a decent home and a family. My goal was to have a family and be able to provide for them. As you see, income was the means to help me achieve my goal. Using economic terms, financial planning helps you manage your income in the best way possible, improve your cash flow and raise liquidity levels so that your expenses are prioritized and covered, create liquidity for investment, maximize your internal investment, deal with inflation, reduce taxes, and guarantee a retirement plan. Financial planning is an ongoing process. It's neither a product nor a service, but a series of interrelated activities that one engages in continuous basis. Think of it like a circle. What are the 5 steps of financial planning process? We need to assess our current position, and through this evaluation, we need also to examine and evaluate our risk tolerance. Second step is to identify and set our goals. The third one is create a plan. The fourth is to implement that plan. And the fifth, the last but not least, is regularly review it so that can make adjustments based on our current situation. We can separate financial planning into broadly 2 phases. Phase 1, as young adults, our initial concern when completing our studies is to get a good and honest job to provide ourselves with income and security. Typically, during this phase, we do not have many obligations to meet. Yet, it is crucial to assess our financial health. This is the first step towards achieving our financial independence by building a strong financial plan. To do this, we need to sit down and make a list of what we own, our assets, what we owe, our liabilities, our income, inflows, our obligations, expenses, and outflows. Are you familiar with accounting and T accounts? Don't get me wrong, you don't need accounting knowledge to do a financial plan. T account is just a simple methodology to draw your financial plan. On the right-hand side of the T account, you list your liabilities, and on the left-hand side, your assets. Likewise, on a separate T account, you list your outflows on the right-hand side and your inflows on the left-hand side. Definitely, the left-hand side of each T account needs to sum up in excess of the right-hand side. Your assets and inflows must be greater than your liabilities and outflows, respectively. Let's see some examples of assets. Assets can be any property that you own, your car, if you have any cash at the bank, if you own any stocks or cryptocurrencies, a life insurance. Your liabilities can take the form of any loan you might have, your credit card balances, and any tax obligations you might have. Some examples of inflows are your salary, any rent receivable, or any other receivables you might have, and any return on your investment. Your outflows are expenses such as groceries, rent payable, utility bills, any taxes you have to pay, transportation expenses, and others. Once we have a clear picture of our financial status, it's easier to see exactly how we need to adjust. When in doubt, you may consider seeking help from a financial professional. I will be more than thrilled to help any of you during the process of your financial planning. While it may feel like a big step to seek help from a financial professional, I'm actually now assisting a lot of young people with their finances. Back in the 90s, when I was starting my own career, there was not so much access to professionals as it is today. Internet has made our lives so much easier in many ways. You will find my contact details at the end of the presentation. During phase 1 of the financial plan, it's very important to start saving. Saving becomes a habit which later on you will treasure. Are you familiar with the term emergency fund? It's the amount of money you have managed to save for unplanned expenses or financial emergencies. Some common examples are car repairs, home repairs, any medical bills, and even any loss of income. Don't worry if you don't have an emergency fund yet. Starting when you are young is the best way to build this safety net. I would even recommend putting that money in a separate account and keep building it up in case you need it during life transition events such as switching jobs, moving to a new house, getting married, having children. You should aim to have 3 to 6 months of living expenses saved in an emergency fund account. But when you are just starting, every little bit helps. Having a family, you officially enter into phase 2 of financial planning. Not only you need to plan for yourself, but also you need to plan for your family, which depends on you and your capabilities. Things are more complex when you have people depending on you. Becoming a parent, you have so many issues to handle, from your daily routine to your goals to the legacy you want to build for your children. During phase 2, your debt usually increases. Borrowing money from a financial institution is a way to build or buy a house for your family. In Cyprus, in order to get a housing loan, you need a down payment between 20 and 30% of the house total value. So for instance, if I intend to buy a house of $100,000, then I need to have $20,000 to $30,000 in a savings account in order to be eligible for a housing loan of $70,000. The more money you have in a savings account, the less amount of loan you're going to need. Controlling your debt at this phase of your life and making sure that you can repay it on time is crucial. When debt is not repaid on time, additional charges apply to it. So one must undertake as much debt as one can repay. While repaying for your debt, you need to save as well. Remember that saving must become a habit. You cannot quit saving just because you undertook a loan. Having a family and undertaking a loan immediately calls for a life insurance. Life insurance is a way to protect your family in case of an unexpected accident, illness, or even death. What actually is life insurance? Life insurance is a way to manage risk. It's the way to transfer risk from families and businesses who cannot afford it to insurance companies who can afford it. Based on statistical rates, 1 person out of 100 die each year. Insurance companies do not care if you're going to be the one who is going to die, because the other 99 people are still paying for their insurance. The insurance company loss is only 1%, but the loss for your family is 100%. There are some of the answers. These are some of the answers you need to consider when buying life insurance. What if I die? What is the amount of my income that will be lost? The income which my family depends on for their living expenses, for paying debt, for educating my children. What if I live but I cannot produce income? Again, similar questions as above, plus an additional amount that will be needed to adjust for my new living needs, such as alterations in the house, perhaps to need to buy a new car. And lastly, can I afford to pay for medical treatment? Or do I also need a health insurance? The younger you buy a life insurance, the cheaper it will be. But most importantly, you buy insurance when you are healthy and most probably not in need of it. Because when you find out that you need a life insurance in case of an accident or severe illness, you're not going to be insurable. And no insurance company will be willing to undertake the risk of insuring your life. Life insurance has benefits for people. In Cyprus, there is a double benefit for the insured. First one, the annual premium paid is subtracted from one's taxable income. And second, when receiving the amount accumulated in the insurance plan after year 6, the benefit is free from any tax. Phase 2 of financial planning can also be referred as the accumulation period. When having inflows, such as your income, you may accumulate savings. Savings that help you build an emergency fund and pension fund. We have already explained what is an emergency fund. Let us now see what is a pension fund. A pension fund is your savings during accumulation period, the money you have managed to save while working and earning an income, and it's aimed for your retirement period. Pensions are based on 3 main pillars. State provisions, which is based on your social security contributions. In Cyprus, this is an analog system. That means that The more you contribute, the more you're going to receive in your pension fund. The second is the occupational provisions, where you and your employer are both contributing in a privately funded system. The third one is private provisions, which are voluntary, privately funded accounts such as savings and insurance plans. All three pillars must be taken into consideration when planning for your pension. What is the retirement age in India? Well, in Cyprus, the retirement age is the age of 65. What actually happens during this period of our lives? Inflows, such as our income, stops from coming in. We retire from our paid jobs and enjoy a quality life with dignity based on the savings we have managed to build during our accumulation period. This period, the retirement period, can be somewhere between 1 to 30 years. Accumulation period, on the other hand, is on average between 30 to 40 years. Can you see where I'm getting through? During accumulation period, we need to provide for the years that we will not be able to produce income. The inflows we need to live with dignity is about 70% of the last salary we have got just before retiring. If, for example, your last annual income was $30,000, you need to build an annual income of $21,000 for your retirement years. So how do you build this income during your accumulation period? The key word here is, again, savings. The sooner you start providing your retirement period, then the less effort will be required. Use the numerical example I just used above. To be able to have $21,000 as an annual retirement income for 20 years, you need to have such an amount during accumulation period that produces the $21,000. $21,000 multiplied by 20 years, if your life expectancy is up to that, is $420,000. I know that this amount might scare you, but this is the mathematical formula we use to find the total income required for our retirement years. A simple multiplication. Have you heard of the 50-30-20 rule? This rule briefly outlines how your income during accumulation period is going to be distributed. 50% towards your needs, 30% towards your wants, and 20% towards your savings. Assuming that you keep up with these percentages, you are probably wondering now how saving 20% of my income during accumulation period will provide me with an annual income of $21,000 during our retirement period. This is where the term investment comes in. The money you struggle to save each month to provide yourself with a decent retirement years needs to be invested in order to generate you the income you need during those years. This is why you need to select wisely a reputable pension fund provider to invest your retirement savings. Investment is related to risk. Risk is the effect of uncertainty on our goals. The effect may be positive, in which case risk creates opportunities, or it may be negative, in which case it creates threats. Managing risk protects you from threats and take advantages of opportunities. As a general rule, the higher the risk, the higher the return on investment. An important part of your financial planning is to understand your tolerance towards risk. Risk tolerance is your willingness to accept a risk in order to achieve your goals. When assessing your risk tolerance, you may wish to consider your financial goals and timeframes, your personal profile, and how do you feel about putting your money at risk. In addition to that, the following are some questions you need to answer for yourself. At what cost am I willing to liquidate assets? What do I want to get out of my investment? Do I want my investment to stay unaffected from inflation? Do I want my investment to be secured? Do I expect high returns from my investment? Am I willing to watch the performance of my investment on a daily basis? Considering the above, you will be able to see what is the level of risk you are willing to undertake. Generally speaking, there are 4 types of risk: low, medium, high, and extraordinary risk. So you will be probably wondering, if I start planning today for my future, will this be enough? The answer is definitely no. We need to often review our initial financial plan. My suggestion is at least once a quarter, but not over a year. We also need to adjust our financial planning when major changes occur in our lives, such as changing jobs, getting married, having children, buying a house, send our children to university, and retiring. When any of the above happens, we clearly need to reevaluate our financial plan and make adjustments and corrections. To do this, we need always to have in mind what are the things we want out of life at that moment. Financial planning is there to assist you with your purpose in life. Find your purpose and build your plan around it. If your purpose shifts, then redirect your plan as well. The transition from one phase to another is smooth when you have a financial plan. Regular reviews of your plan will get you to retirement period effortless without realizing how time has passed by. On the other hand, if you fail to plan, then a transition may fall hard on you and your family. Above all, we need to have a financial wellness in order to be able to concentrate on things that actually matter for us, like raising a family, creating a generation wealth, and adding value to this world. It is proven that people who plan for their future have more chances to succeed in life. So what are you waiting for? Plan your future and create your net positive for yourself, for your family, community, and the overall world. Thank you for watching this presentation, and now I'm ready to take your questions.
Hello.
Hello? I'm ready for questions. Can you hear me? Hello? Can you hear me? Yes, nobody's there.
Hello. Hello.
Hello, can you hear me? Yes, I have just completed my
Yeah.
presentation.
Hello. Hello.
Hello?
Hello, ma'am. I think there is a network connection issue.
I can hear you
Hello.
well.
Uh,
Yes.
okay, ma'am. Okay. So, thank you so much, ma'am, for giving your valuable time. I think there is no question from our side. So, thank you so much on behalf of our Parul Polytech Institute, Head of Institute, Mr. Jatin Vaidya sir, and our Head of the Department, Mr. Hemant Patel
Mhm.
sir, and uh, Dr. Devanshu Patel sir for continuing and motivating us and providing us this wonderful platform. And thank you so much.
Thank you as
Hello.
well. Yes, thank you as
Uh-huh.
well. Have a nice
Okay,
day.
ma'am.
Have a nice day. All
Same
right.
to you,
All right.
ma'am. Okay, bye, ma'am.
Bye-bye. Bye-bye.
Bye bye.